investors care about profits. And just like I've been hammering on this entire presentation, for the past 2 years, Permian Basin producers have been oversupplying the market and eroding profits. If you want to see sector multiples increase, then you want to see the Permian Basin roll over.
Welcome to Inittowinit. This is Steve Barton, and thank you for tuning in. We're going to continue our discussion with Christine Guerrero. This is part 3 of a 3-part series on oil and gas. We left off with Christine finishing her PowerPoint presentation, talking about the plateauing of production out of the Permian Basin. If you missed parts 1 and 2, there's a link to it down below. Without further ado, Christine Guerrero. So this is going to take time. They have to build out these terminals so that you can turn it from a gas into a liquid, ship it across the ocean, and then deliver it. It's not something that happens overnight. Okay. All right. Cal's question, let's see, you answered basically asking about the Trump administration would be positive or negative for oil and gas, and if he sanctions friendly countries, that's bearish. If he sanctions unfriendly countries, that's bullish. This is interesting. This is one from Sam. He says, if the oil and gas narrative improves under Chris Wright, so he's going to be our new Secretary of Energy, and sentiment with it, could sector multiples finally expand? Liberty put out that a report on the positive impacts of cheap, reliable energy on society and humanity. Wondering if we're going to be hearing more of that kind of messaging over the next few years, just from a much bigger platform. So what do you see coming into play with Chris Wright as Secretary of Energy?
I don't think the markets care. I mean, Jennifer Granholm was an EV person, right? And a lot of those EV companies and alternative energy companies devalued under her term. So why would we think that Liberty Energy's Chris Wright is so different? I mean, investors care about profits. And just like I've been hammering on this entire presentation, for the past 2 years, Permian Basin producers have been oversupplying the market and eroding profits. If you want to see sector multiples increase, then you want to see the Permian Basin roll over.
Yeah. Okay.
That's when the complacency ends, because in the near term, there's been just way too much price destruction, from that segment. And I mean, that segment is Chris Wright's key customer. So.
Okay.
But he still can't fix the water. I mean, the water issue, he still can't fix major fundamental issues with the asset. So,
Yeah, we're still making a whole bunch of
water
toxic water that we have to do something with.
So, and quarter over quarter, or not quarter over quarter, but year over year, those prices have been rising. So if you want a fun little experiment, go look at the Dallas Fed survey that comes out, especially the first quarter of the year, and look at what companies' price expectations were in 2021, and compare them to their break-evens in 2022, and then compare them to their break-evens in 2023. And here in 2 weeks, I'll be looking for what their expectations were, in 2024. But year over year, their break-even prices are rising.
Okay.
These and a lot of that is the water situation. So these costs are increasing, and I like I said, I think there's a whole lot of people disappointed that they grew their assets so much over the last 2 years, because it has hurt them. It has not helped them.
Okay. Let's see. Patrick wants to know. Says many junior producers appear to be trading below historical EDV DAC. Okay, so I'll do enterprise value divided by debt-adjusted cash flow multiples and a discount of PDP, proved, developed, and producing reserves, compared to the intermediate and large cap producers. So basically he's asking, Are the junior producers the place to be right now, or do you think it's the majors? Where's the biggest bang for your buck?
Well, okay, so junior producers, higher cost of capital, lower economies of scale. They may not have as long as runway, but at the end of the day, it's really all about macro. When the oil price goes up, big companies and little companies both go up. When the oil price goes down, they both go down. And then this past year, the smaller companies, when they go down faster than the big companies because they can't buy back their shares as aggressively. They have typically have less, functional support, and their flips, right? So if you were in a situation where you thought oil prices were going to rise, you would want to ride those small guys up.
Yeah.
But if you were in a situation where you thought oil price might go flat, you might want to be in the larger companies because you have a little bit more protection. So, but timing that is very hard, and nobody can say with certainty what they think January 20th looks like when Trump starts signing 100 plus executive orders. So it's, I think that a lot of the damage that has occurred this quarter has purely been people saying, you know what, I don't know what's going to happen next quarter, and so I'm going to move to the sideline and wait and see. So, I think that the average investor was confident that Trump was going to help the industry, then you probably would have seen the rally in the sector, but that's not what's happened. So the average person is more scared of Trump than he is, confident that he's actually going to help the industry. So, and at the end of the day, cheap prices help everyone but the oil and gas industry. So, Trump has gone on record saying, well, because people have pushed back on the drill baby drill, oh, drill baby drill, like you'll drive them out of business. And he's gone on record saying, I don't care if they go out of business. So, but he can't tie their hands behind their back and force them to spend money. So,
yeah. He can make the process easier, but they're the ones that choose to do it.
All these statements are driving the algos and driving people to sell out. So,
okay, Patrick is a bonus question here. So, should investors focus on light oil producers or heavy oil producers, and/or those producers with exposure to Brent or WTI?
So I really don't have a preference in terms of light versus heavy, but when you think about Brent versus WTI, you have to think about their currency in reference to the US dollar. So the US dollar has been so strong this past year that you've seen a lot of really good companies in other countries underperform because that nation's currency was also underperforming. So if you believe that Trump is going to navigate toward a softer US dollar, you might want to own more companies that are outside the US.
Oh.
Because those countries would be considered more attractive to invest in, and the fund flows would go to their stocks.
Yeah. Okay. That makes sense. Okay. All right. Another question, kind of relating around the Permian Basin. Hey, Christine, thanks for all your research on the Permian and oil markets. With that said, it seems like the next big growth area for oil production is offshore. So Esbrand wants to know, I say this because based on Exxon and Chevron hinting at plateauing production in the Permian Basin and their investments in offshore in Namibia and Guyana.
So, I do believe that offshore is a growth story right now globally. And, but again, like you see offshore growing because you see the new FPSOs roll out. So you can go to Exxon's presentation. You can see how their timeline is for their FPSOs. They're not going to grow beyond the capacity of their FPSOs. For Suriname, which is next door to Guyana, they're getting their first FPSO in 2008. That was announced this year. So 4 years after it was announced before you get first oil. And for Namibia, no FPSOs have been announced yet. So when you get an announcement, then 4 years later, maybe they get some more oil. But, but right now, it's like I love offshore because it's easy to track. It's less number of companies and the volumes are higher, versus, in the smaller plays where you have a ton of small little junior operators, it's more of a nightmare. Trying to figure out what these guys are all doing. But now it's actually helped in the Permian Basin because there's been a lot of consolidation and the bigger companies just dominate. So, the quantity so much that it's like, okay, like what's Exxon doing? What's Chevron doing? What's EOG doing? What's Conoco doing? Diamond, etc. And then these other guys, like these smaller companies, even if they announce that they're growing or 5 or 10%, like when you look at the actual volumes, you're like, well, okay, that's not going to move the needle, and some other small guy in another basin is going to fall by that much. So,
Okay. It says, is it also true that some offshore oil sites break even at costs around $30 a barrel?
So yeah, Guyana and Suriname, they're both $35 a barrel-ish. So and even like in the Gulf of Mexico, where you've already got a platform or an FPSO, if they're doing infrastructure-led exploration and they already have those facilities, and if they drill an exploration well nearby that they can tie back to their existing facilities, sometimes those smaller exploration prospects will have a break even of only, $40 or $50 a barrel, and they're online within a year of being found.
Okay.
So, yeah.
Okay. Let's see. Christopher, offshore contracts. So do you see, let's see, you kind of hit on this. Aren't offshore contracts increasing more quickly with shale deterioration?
They're increasing up until a certain point. So the number one inhibitor right now to anything increasing is $70 to $75 per barrel oil. Nobody is going gangbusters increasing anything in this current price environment. They're really just trying to maintain what they have and maybe grow nominally. But if they were spending too much money in growth, then the shareholder class would be hammering them, because no one wants to see anyone spending a lot of money in this current price environment. It's ridiculous. The world isn't asking for more barrels right now. So what are you doing?
Yeah. Okay. All right. Let's see. Christine says Wall Street is rewarding free cash flow over growth.
That's what I just said.
No, I mean, oh yeah, I wrote down that was your answer to their Twitter question. Okay. All right, let's see. Wolfgang wants to know company questions. General thoughts on Frontera Energy.
So Frontera is a Colombian-based heavy oil producer, and they have 2 exploration discoveries offshore Guyana near Exxon's discoveries. But unfortunately, Guyana, the government right now looks to be acting like a banana republic, because the Frontera and the other company, CGX Energy, that's in that block, they've spent over $400 million drilling wells in this block to discover oil and gas. And whenever they submitted an application to basically further appraise the license at the end of their exploration period, it should have been a rubber stamp that these companies got an extension to further explore. They've spent the money, they've met their commitments, they found oil that they want to further appraise, and the government is saying you no longer have a license. So it looks like these guys are probably going to end up in a international arbitration with the government of Guyana to try to, maintain their license. So it's crazy. I mean, Guyana has been extremely friendly to Exxon, but Exxon is delivering them a lot of free cash flow right now because their assets are on production. And but smaller companies like these junior companies, there's, like I said, they're probably dealing with a lot of Banana Republic politics and situations, and I don't know if there was wheels that were asked to be greased that weren't greased. I mean, I just know on the face of it, they've met their commitments. It should have been extended. Now it's in limbo what happens. And so like their stock hasn't performed well this past year. It's significantly undervalued when you look at their value measurements, but it's also relatively illiquid. It's owned almost entirely, like 40% of the company is owned by a private equity company, so it's not very liquid. And but you're looking at Colombia and Guyana, two countries that are now looking like unsafe to invest. So, but if the dollar softened, it'd probably do well purely based off of the free cash flow that was coming out of Colombia, and even better if they win in arbitration against the government of Guyana. So that'll end up being national news when that outcome is known. So
Okay. Tile Brick, along with a bunch of other people, wanted to know why is the price of gas-rich Devon cratering?
I mean, like, what's the time frame? I mean, everything has been cratering these last couple months. I mean, the TPL, which is a mineral company and a royalty company in the Permian Basin, it entered the S&P 500 at the end of November, and it's already down 30% in 1 month. I mean, there is tremendous selling pressure in the entire oil and gas segment, and potentially because of Trump.
Yeah. Okay.
I mean, I can't say with certainty, but it makes sense because just like that section that I went through, there were more bearish drivers associated with Trump than there was bullish because of all these audacious statements he's making online.
Yeah.
The markets just can't ignore that entirely, because what if he actually does sanction Canada? I mean, it would be crazy, but it's not, but beyond the scope of reality when it comes to Trump. That's why, Russia and Putin, like other countries, probably do fear him because he's a volatile element, you know? It's
A loose.
they're friends. It's a hey, he's unstable, and yeah, we're gonna play nice.
Oh, that's great. Okay, Sam wants to know any thoughts on APA?
So APA is they like I that's another company whose stock this year has been crushed. Like, I think it's one of the top 5 poor performers in the oil and gas segment. They're like, if you were to do a screen on E&Ps, exploration and production companies in the US, I think they're the dead last, which is also kind of crazy because they have decent assets in the Permian Basin. They have 50% of the Suriname field that's going to come online in 2028. Total Energies is the operator of that asset, and their licensing agreement with Total is that Total is even going to finance the project for them, and then they can get paid back out of oil later. So APA is not even having to pony up a bunch of money while this asset gets built. They had a discovery in Alaska last year, and this year, maybe even right now, they might already have a rig completing another 1 or 2 prospects up there, which I think could end up being discoveries because they were de-risked by the one last year. They've got, but here's 2 of the key reasons that I think that they've underperformed this year. So they've got assets in Egypt that I think from all of the Red Sea conflict and the hostility going over there, that was probably considered a, do not invest, situation because of the Egypt exposure. And then they also have announced that their assets in the UK, they plan to basically close them in, I think by 2030, if I remember correctly. And people weren't expecting, or not everybody was expecting that they would turn them off by 2030. But the issue in the UK is they've currently got such onerous regulatory burdens and tax burdens on these assets offshore in the UK that you can't make any money like as a producer there. And so that's why APA kind of looked at their timeline and they're like, okay, well, we'll make money here for the next 4 or 5 years, and we'll use that money to actually shut the asset down. So, I mean, I do believe that their growth opportunities outweigh the stink on them from like Egyptian geopolitical stuff and UK. Like I said, it's been nightmarish for everyone in the UK. Like you've even seen like big companies merging their divisions together to try to harness economies of scale to try to eke out some kind of profit there. But I mean, you know what they say? It's like the worst performer from this year might end up being the best performer next year. So I mean, it is ridiculously cheap if you screen it out. And I mean, they've been buying back their shares. They've been paying a dividend. So, I mean, there's a lot of reasons to own it, but the chart is, I mean, it's like, I own it, which is why which I know so much about it. But I mean, the chart is so ugly. I mean, even I wish that they would fire their CEO. I'm like, get rid of your CEO. I'm like, this guy, he doesn't know how to talk to shareholders, obviously. You're probably looking at it right now.
I am actually, yeah. I pulled it here on the side. I'm like, yeah, that is a pretty rough chart. It's about a halving in a year or so.
Yeah. Like I said, it's ugly. It's ugly. But like I said, they own a lot of good things. And actually I think at this level, they might be a takeover candidate,
Okay. Yeah, I saw the same thing though, buying back shares and a nice dividend. Sam also wants to know about Talos Energy. That's this one.
Talos is a Gulf of Mexico offshore company. They had a large discovery a number of years ago called the Zama Project in Mexico. And Mexico essentially stole operatorship away from them. And the legal dispute deferred the project start for a number of years. Again, like talk about Banana Republic, situations. Like this is part of country risk. And Mexico obviously wasn't a safe country to be invested in if you had exploration success because the government wanted to keep more of it for itself. What was interesting is Carlos Slim, which is like Mexico's richest billionaire, started buying shares in Talos Energy, but it also bought some of that asset away from Talos. And then it bought so much of Talos shares that I guess the board of directors of Talos got scared about a complete company takeover. And so then they implemented a poison pill. And so the stock had just atrophied since then. And recently they sold even more of the Zama project, which isn't even online yet, to Carlos Slim. And when they did that, they must have come to some kind of agreement because they canceled the poison pill. But what's going to happen in the year ahead, is yet to be seen. I like Talos, like when you think about the next couple years, because earlier this year in Q1, they acquired another Gulf of Mexico company called Fieldwood. and Fieldwood had some really good assets. So I think next year, you'll see the free cash flow from Fieldwood's assets really helping Talos. But it's another company that, like, when you screen it, you're like, man, this thing looks cheap, But there's been drama, like I said, you're fighting with a billionaire, potentially trying to take you over at a low value, activist investor. So, and then also the CEO abruptly left the company, and when you listen to the interim CEO talk at the next conference call, it made it sound like he got pushed out. So they haven't named a new official CEO yet. They still have this interim CEO, which was on the board. So, I mean, who knows? Like it's kind of hard to predict what's going to happen with Talos until they name a real CEO. We'll see.
Okay. But it looks like cash flow is coming.
There's reasons to like them, and then there's other reasons to say, I'm going to wait,
Okay. Double A wants to know about, says, what happened with CGX Energy out of Guyana and Suriname Basin? What went
Frontier
wrong?
Energy's partner. So the whole spiel about Frontier Energy and the Banana Republic stealing their license, well, the same applies to CGX Energy. So,
Okay.
let's see what happens in 60 days, whether or not they're in international arbitration, because there's like a 60-day window right now where the government either has to come to an agreement with these companies or it's going to arbitration. So, but yeah, it's been awful. It's not been pretty. So,
Okay.
like I said, these two companies spent over $400 million. And then the Banana Republic said, we're not going to give you an extension. Like, it's crazy. It's crazy they spent that much money. And then the government's basically like, no, I want this back. It's almost like the Mexico thing. No, I want, you found this? No, I want this.
Okay.
It was oil and gas.
Yeah. Jillian is asking, what company is best placed to make greater profits from handling and recycling the increasing amounts of produced water coming out of the Permian wells? Thoughts on Aris or another similar company to benefit from this?
So Aris Water Solutions is kind of like a new company on the scene. I will say I really respect their CEO. I mean, she is very forthcoming. She explains the situation with the company and with the long-term outlook of the Permian Basin to produce water very well. Their clients are primarily majors. They do a lot of work for Chevron, a lot of work for ConocoPhillips. The stock has, been on a great run this year. I would be concerned that they might start looking a little expensive. So that is one thing. The water companies have done well this year because this water issue, like they're cleaning more and more water, and they're charging higher and higher rates, for handling this water. Landbridge is another company that I think they IPO'd this year. That people could look into. They have been buying up a lot of surface rights that would allow them to inject water in areas that don't have a lot of water injection yet. So that would be another company. And then Water Select Services, is another company. But I haven't screened these companies recently. But the last time I looked at them, I did feel like they were starting to look a little rich when you compare the multiples. So these companies tend to trade a lower multiple than pipeline companies and other midstream companies. And I believe that's because investors are somewhat scared about a liability associated with injection wells if they do start to leak or if they do start causing leaks. So I would actually never expect them to have the same multiple as an oil or a gas pipeline. So, because then less liability, potentially less liability. So,
Okay. That makes sense. They probably got a lot more business if you're right about water coming out of the.
well, yeah, there's
Should do
so long as they've secured the adequate runway, and that's kind of something else that keeps me from really being invested in them. Is like by the time I looked at them, I felt like they were already looking kind of rich. And I just started thinking liability, liability. I'm like right now, if a well blows out in Texas, the company that is responsible for plugging that well is the owner of that well, not necessarily the owner of the well that caused it to blow out.
Oh,
But yeah, which is ass backwards. That's and it's not just Texas that's like that. There's other states that are like that as well. But never before has there been companies pumping water into zones that it didn't come out of. So this overpressure situation is like new. It's new in the industry, and I don't think that the current regulations have like thought about it. And then even in Texas, we've got some regulations that we're currently updating right now, but haven't been updated in over 40 years. Like that's how old some of the controls are on oil and gas production. They're antiquated. Like they don't properly look at it. But I do know that there's large operators in the Permian Basin that are starting to question whether or not in the years ahead, there might be a regulatory change that pushes the burden back onto them because, you know, they cause the problem.
yeah.
And even when you think about these earthquakes and whatnot, like if really bad earthquake were to happen and if it were to hit, the cities of Midland or Odessa, which are highly popular, are more highly populated. I mean, if there was going to be a class action lawsuit, wouldn't you want to sue everybody in the basin? They all caused it.
Yes.
So
Yeah.
so it would have to be a pretty disastrous earthquake, but it's not beyond the scope of possibilities, right? Because again, like this is injecting water into formations where they weren't extracted from, especially to the tune of 21 million barrels per day. Like this is the biggest experiment in oil and gas history playing out in West Texas. And specifically West Texas, not New Mexico, because New Mexico has already tightened up their restrictions on water disposal within that state to protect their groundwater there. And so the people who produce oil, water, and gas in New Mexico, they send their wastewater to Texas to be injected. So Texas is not only dealing with its own wastewater, but they're also like, hey, friend, send your water here.
That's why there's a bulge in Texas there and a cavern in New Mexico.
That's a good part.
Yeah. I remember seeing that on the that you showed.
Like the regulations, the regulators. I mean, these, like I said, this is like clownish almost, when you think about it. Like when you look at this, like from a bird's eye view, you're really just like, what the hell's going on out there? And like I said, that's why I've been so adamant about it. I'm like, this is crazy. Like this is not the way that oil and gas extraction has ever been done. Definitely not the water management. I've never heard about an area the size of Florida being uplifted and subsided before, within pockets, it's crazy. So, yeah.
Okay. Matt wants to know, can you please ask your opinion on Petrobras and Ecopetrol?
So Petrobras has the most prolific, highest producing oil wells in the world. And just like the slide that I showed on Brazil, you steadily see them, growing production year over year, high margin wells. I believe that if we're in a soft dollar situation, Petrobras is going to be something that you want to own. Ecopetrol is a Colombian company. It's harder for me to own because Colombia it's a harder place to do business. They don't have the assets. They have good quality assets, but Petrobras has great quality assets. So, but I mean, Ecopetrol does, they pay a really strong dividend. So a lot of people who like dividends, tend to like it. And again, like in this soft dollar situation, a lot of people believe that Trump is going for a soft dollar. You would want to own these foreign countries, producers in foreign countries, because they will start to do well, because people will put money into those foreign countries ETFs, and usually the top stock in that ETF is Petrobras and Ecopetrol. So
Okay, and they'll benefit simply from their ETF.
simply from like I said, the de-risking, I guess, of emerging markets. So, yeah.
Okay. All right. Lazar wants to know. He's the one that recommended that we get you on the show. So thank you. You've been the longest interview that we've ever had. So this is obviously really good.
You said you might need to break it up in 2 parts, but you may end up needing to break this thing up in 3 parts.
See, yeah. Says, my question is regarding HP. I'm not sure if I'm pronouncing this right. Helmerich and Payne.
Yeah, Helmerich and Payne. Helmerich and Payne. HP is a really large drilling rig company. They have excellent rigs. They recently merged with, I want to say it was a German company, but anyway, they merged with another rig provider who had a lot. So Helmerich and Payne traditionally has mostly had their rigs in the U.S. and in Canada. And this company that they merged with had their rigs mostly in Africa and in the Middle East, I want to say, if I remember off the top of my head. I actually really like that merger, because I believe, back to my Permian is flattening thesis, where's the growth going to come from in the years ahead? I believe it's going to be a lot of activity happening outside of the Permian Basin. So I liked the HP merger, with this other company, getting exposure to areas where you would see drilling activity increase. The only thing that I don't know is, like, a lot of times after a merger, you'll see a lot of selling from large shareholders that got acquired. And I can't predict whether or not that's going to happen. But I would say, for people who are interested in that, watch the technicals and buy it, buy it because you like it on fundamentals, but also because the technicals are telling you it looks like a good time to buy. So, but yeah, I think it's a great company. So,
Okay. That answers Hanny's question. Okay. Final thoughts and forecasts. Crystal ball question here. Okay. David is wondering, any forecast recommendations? What's your top pick for 2025?
oh my gosh, we had this on January 21st. I mean, I really don't have any forecast until we figure out what the Trump factor is going to be.
Well, thank you very much. We'll have you back on after Trump is elected and he's able to hammer out maybe half of those executive orders that we'll get a better blueprint of what's going on.
I'm already exhausted of Trump statements, and he's not even in there yet. I mean, it's going to be, who knows what we're in for next year. But yeah, if he proceeds ahead with these tariff schemes, I want him to proceed ahead with the sanctions. Tariffs, not so much. So see what happens.
Yeah, we shall see. Alrighty. Do you have any final thoughts? Anything I should have asked that I didn't? If people want to get a hold of you and follow your work, how can they do so?
So you can find me on X. She Drills is my call name, because I started out my career as a drilling engineer. And that's I will inundate you with oil and gas remarks if you follow me on there. And you're also welcome to follow me on LinkedIn. I don't post as much there, but I do post some content on LinkedIn. And like I said, if you want to reach out, maybe for further speaking opportunities, or even if you wanted to learn about, Octane, which is the energy ETF that I work with, then you can find me at Christine Guerrero Octane.mic. Christine Guerrero at octane.nyc.
Okay.
Or you can go to octane.nyc on the web, and you can see exactly what the portfolio owns. So we've got 30 different stocks in there across the energy spectrum. So we own coal in there, oil and gas services, shipping companies. So if you're looking for leads, you could just look on there and you never know, you might find something in there. And some of the companies that have been asked about, they're part of the portfolio right now. So.
Okay, awesome. We'll put links to all that down below in the show notes. Christine, this was a real pleasure. Thank you very much for coming on the show.
Yeah, thanks for having me. And I mean, most people you're not going to know, but earlier in this week, we were supposed to record this, and I had major IT, issues on my end, and we had to reschedule this thing like 4 times. So, I mean, both of us are happy that it's over now.
Yes. It was well worth the wait. It was worth the wait. Thank you very much.
All right. Thank you.
And thank you for tuning in. Be sure to support the show and share this with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.